Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Joining me is Michael Normyle, U.S. economist at Nasdaq, for a recap of Q4 earnings. We'll also take a look at what analysts are pricing in for Q1 and Q2 of 2023. Michael, it's great to see you as always. Welcome back to Trade Talks. And this was such an interesting earnings season because macro just overshadowed everything. And we kind of saw that in the reaction to earnings reports. Earnings really didn't reflect what we're seeing in macro.
Right. So I think it's interesting because for Q4, you know, we have 98% of the S&P 500 has reported, and earnings is on pace to fall by 4.7% year over year. But that seems kind of surprising given the recent strength in the economy that we've seen, except you have to remember that we kind of ended last year on a weak note, so that's where Q4 seeing negative earnings growth makes a bit more sense. And so this is actually going to be the first negative quarter since 2020, and it's going to be 6 of 11 of the sectors is seeing negative earnings growth. And really the areas of strength have been energy, where there's, energy prices are still a lot higher than they were a year earlier, and refining margins are still quite high. And then also we had industrials do well, where there's airlines in there, and there's been steady demand for air travel. And then there's also real estate, where REITs have actually done pretty well with self-storage demand. Rentals are still have high prices and all that. So there were a few areas of strength, but in general, earnings have been pretty weak for the fourth quarter.
And if you look ahead to Q1 and Q2 for 2023, is there additional weakness expected?
Right, exactly. So it's just been steadily being revised lower and lower, the analyst estimates for Q1 and Q2. So if you look back about to June, growth estimates were about 15 percentage points higher than they are now for Q1 and Q2. And it's about, we're looking, close to negative 5% for Q1 and Q2 as well. So it's going to be kind of the current expectations are for a similar picture to what we saw with Q4.
And what's interesting is it isn't necessarily earnings or revenue that's being revised down, it's margin.
Right, yeah. So what we've seen particularly is that even though the economy's been slowing down, we have seen all these signs that it's still pretty resilient. And so that's where you maybe see margins taking a hit more so than sales. And so we have big margin reductions for communication services, and that's your Googles and Metas and Netflix. And then also for consumer discretionary, which is Amazon and car manufacturers, hotels, restaurants. Also materials producers, which are chemical manufacturers, metals producers as well, and tech companies like chips and software and hardware producers. And so that's companies that provide discretionary goods and services. And so we have seen, like with Walmart's earnings announcement, they said that they've seen signs that people are spending less on non-food items. So they're really prioritizing essentials. And so that's where companies that are more discretionary might not be able to pass on price increases as well, and where their margin gets pinched a bit more. And so if you look at margins for more essentials like consumer staples, utilities, and energy, they've held up a lot better.
Yeah, and to wrap up here, it just seems as if the market is really focusing on what's with interest rates and Fed policy, and this is almost immaterial to what's happening. And fundamentals are still important, though they technically should not be overlooked. But in your opinion, do you think it's really going to be, at least for the next 6 months, focused on what the Fed is doing?
We'll have to see if the economic data kind of behaves a bit more than it did in the last month. And I think if we get some kind of return to normalcy after really strong numbers for January, then you might get a bit more kind of fair, even-handed treatment of earnings news and all that.
All right. Appreciate the insight as always, Michael. Thanks for joining us on Trade Talks. And thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.